record on this computer. Okay, so obviously before the day begins, you want to get a sense of how the market is going. So pre-market is very important for me, and that's why I put up all the pre-market information onto Discord and on Telegram. And that kind of gives me the general direction of the market. It gives me an idea as to which sectors are moving at that time. So right now you have a lot of the software enterprises, posting earnings. And so I think even after today, at least the software enterprise stocks will be a positive bullish sector tomorrow. Okay. So you're getting a sense of which where the general direction of the market, let's say, is bullish. You're looking at a particular sector and it's software enterprise like Zscaler or CrowdStrike or one of those. Okta didn't do too bad. So anyway, the stocks that did fairly well, especially after earnings, they're pointing up. Those are the ones that I would put into like an active. This one I have it set up as a 4-window set, so that way I can see all 4 stocks at the same time. And so let's say for that particular morning, I'm looking at, well, I always look at Tesla. So I'm looking at Tesla, AMD, Amazon, and Facebook. Okay, and these are the ones that I'm looking at. And then I also, once I want to get into a particular trade, I also start looking at UVXY. And instead of using SPY or QQQ or trying to look at the banking information, oil, and all that stuff, I actually have decided to just focus on UVXY. Okay, so let's say, for example, well, let's take this one because I had to go to the airport, take my wife there, and by the time I came back, the opportunity just lost. So this thing early in the morning, it hit like 1173. I had 2 contracts. I closed it out in profit, which was great. I got out. I was at the airport over here, and I think I could have gone in anywhere here, but I was kind of like, I didn't have a sense of continuity for the market. But in any case, let's say, for example, we're looking at, and these are 10-minute charts. You can use 5 minutes, 3 minutes, 1 minute, but I prefer the 10-minute because the buy and sell signals don't come as often, okay? And it's easier to tell like whether the buy or sell signals are good and valid or not. And in this situation, we can actually, we don't necessarily have to look at the Fib clouds, although the Fibonacci clouds gives you a sense of where the stock market is at the present time. And the greener it is like this, when you have 3 of these unfurled like that, that's fairly bullish. Okay, so do know that there's a propensity for bullishness. So if you got in right there on the sell, right, the next minute, the next 10 minutes, you're like, okay, that's good. And then you get like a doji candle, which is in this indecision, and then you get a buy signal here. You would have to get out from, if you got in at 1160, you would have to get out like at 1155, 56. So this is fairly tight. Okay, so you want to be careful when you get into puts when the flags are unfurled like this. When the flags are, when the Fibonacci clouds are fairly red like this, this is basically telling you that in general, AMD is in a downturn. Okay, so in this situation, you want to be careful with buy signals. Okay, be careful about getting into buys because they're like this one over here would have paid off from here to there. But let's start here. So this is today, right? You're getting a sell signal, and every 10 minutes, you see this type of motion. And look at this. Here's your buy. So imagine you decided to jump in here, okay? And the flags, notice the flags, they're all unfurled, they're all crunched up, okay? So there is no clear sense of which direction to go, okay? The next one is a down, it's flat, another red one, and there's a sell. So in this situation, you would have gotten in too soon and you would have lost money. You follow that? So yeah. In general, when the flags, when the Fibonacci clouds are like this over here, come here, right there. See how red they are? In situations like this, have a propensity to put in puts and go short rather than buying, okay? In situations where you have this type of flagging, like right there, try to take up the calls and go long rather than trying to go short, okay? Because you'll notice that there's a lot of buy and sell signs that are popping up, okay? And when you see it like that, it gets awfully confusing. So the best way to do it is get a general sense of the flag. This is bullish trend, and try to hit the buy signals at that time. Okay, now I probably am confusing you more than anything, but let me kind of go back and stick to Tesla, for example, right? So if I want to look at Tesla for the rest of the day and really track it, I'll look at it the daily, and then what I want to be able to do is create some Fibonacci levels. Okay, so this gives me on a daily basis, this gives me a 1243 as the next Fibonacci level. Right here, 1141, and then 1079 right there. So this is the range in which Tesla is trading, okay? So now that I have that sense, I want to be able to look at where have the candlesticks been, okay? So you can go, hello, where is, here we go. So I would use horizontal rays to kind of get a sense of where they are ending. Here's another higher one, and let me choose another low one. Here's another good low one. So here, I have a range. This becomes my dynamic standard deviation, or the range in which I believe Tesla will be trading throughout the day. Okay, so that's on a daily basis. Okay, so now that I have a sense of, okay, 1202, that's a bit out. So let me focus on, since I want to focus on the inside, let me focus on 1173 and 1063. So this is my, think of it as my football field. Okay, anything outside of that is out of bounds. I want to be able to focus on this area. Okay, so now let's go to, here we go. So here's Tesla, all right? So imagine this is today, and we started a great day. So let's say we're just starting from brand new, okay? We don't know what's going on. Everything is clean slate. We're liking Tesla. We're liking the overall general Fibonacci clouds. Actually, let me even turn this off so it'll be easier to see, okay? Oh, here's another one to add. Let me add this, so that way it'll give you VWAP. I think everybody knows what a VWAP is and how to use it. But for the sake of those who are listening in here and not sure what VWAP is, it's the volume weighted average price, okay? So it doesn't go purely by the average price per trade. It goes by the size of that trade and gives you the pricing. So this yellow line serves as the VWAP, kind of like the average pricing, volume weight average pricing for that day. So here's 9:30. Ding, ding, ding. This is what I see. 9:40. 9:50. 10. And here's a buy signal. Okay. So then what would I do with the buy signal? So you have the checklist, right? What are the questions that we want to be able to ask? So number one, do you remember what's the first question you want to ask once you see a buy signal? Is the candle long?
Yeah.
And notice that it's actually very short. If anything, it's getting shorter. Here's your long candle, but every candle thereafter is getting narrower and narrower and narrower. So what's happening here is likely there's consolidation taking place. So this is not a very strong buy signal. Okay. Is it above the yellow line? Boom. Okay, well, we have two yellow lines. All right. Thin yellow line. Is it above the thin yellow line? Yes. Is it above the blue line? Yes. How about volume? No, actually volume is quite low. Let's not worry about that for now. Okay. So this buy signal, if you were to look at it from what do you call it, a candle formation basis, somebody could easily misread this as a bull flag, right? Because you go from here to there, and then from here to here. This is like a bull flag or bull pennant. So somebody may be tempted to jump in here, but in this situation, you would not jump in, okay? It's a very weak buy signal. Think of it as that way, okay? Very, very weak, very risky. Okay, so you just wait. And there's your dragonfly doji candle. All right, so now when you see a sell signal, what are some of the questions that we're asking? Number one, is a candle
long?
Long. Yes. Is it below the yellow line? Yes. Is it below the blue line? Yes.
Yes.
Is the volume above average?
Yes.
Actually quite high in comparison to all of these over here.
Yeah.
That 10-minute with this type of candle, that is a decent amount of volume that's coming in.
Mhm.
Now, people who are focused on the VWAP, okay, which can be, I think, also can serve as a a weak confirmation. But some people just use this. And they'll for day trading, they'll look at this and say, well, the moment it falls below VWAP, that's where they jump in. Okay, but if you were to back test it with other charts, especially when it's a choppy day, this is not the most reliable thing. So, but it is helpful. It's good to know that. What's that?
I've always used VWAP a lot different than that. Usually I don't even put the line on the chart. I use the at the very bottom of your screen where where it shows a representation of VWAP. I've always described it and been just the way I use it is that basically it's at the line in the very middle of that graph is what I call fair market value. Up towards the top is
overbought.
Kind of overbought, and at the bottom's oversold.
Yeah.
And I'll watch that side, and if I see it being oversold, usually I know at some point here soon it's gonna start getting purchased, and you'll usually see a trend reversal around there, and same thing if it's overbought.
Yeah, actually,
I definitely look at it that way.
You're bringing up a good point in terms of overbought, oversold, because actually this is the Williams R indicator.
Right.
I actually changed it to length of 9, so it matches over here. This is basically overbought and oversold.
Right.
But again, this by itself is not reliable. I have it there just to take a look, a very quick glance at it. I don't
Yeah.
rely on it. I just see it as kind of like, okay, that's kind of like the background that I
Yeah,
see.
I definitely, it's one that I have on my, it's an indicator. I use ZVWAP as an indicator, and it's
Okay.
something that I use to reinforce trades.
Okay.
I'll see, like, if I saw that weak buy signal, but
Mhm.
I saw that it was oversold also
Yeah.
instead of overbought, or
Yeah.
at least at fair market, you know, towards the middle or below that middle line.
Uh-huh.
On my ZVWAP, then I would maybe take that as a not as weak of a buy
Okay.
signal. But being that you had that like buy signal on that small candle and it was overbought, I would say, yeah, it's extremely weak.
Yeah. So
Because it's already overbought. It's a small candle. I mean, there's just too many things, but it's something I use
yeah,
in reference
as a
for
confirmation.
sure, as a
So
confirmation. Yeah.
if I turn off the VWAP right here, we have enough confirmations of the sell signal to say, yep, this is definitely a good entry. It's not as weak
Right.
as this one, but it's
Right.
definitely a good entry. But I just put it up there for point of reference. So that way we
Right.
know that, okay, it's below VWAP. That's another positive. So
Yeah.
suppose that.
One quick question with
mhm.
the I know with our confirmations there. So the candle, just to make sure, so the candle should be below the blue line. It doesn't mean the yellow line needs to be below the blue line.
As long as it crosses, like over here, we have the candle touching it, and then the wick actually
Yeah.
goes below that. So as long as it is touching it or passing it, it's somehow
Will you
attached
give me a
to
pair
it,
of shorts?
you know? So that's the key. Again,
Okay.
it's one confirmation.
Yeah.
So if the
Yeah.
blue line was down here, does that mean that you shouldn't get in because everything else seems to point to, to this being a good entry, but because the blue line doesn't touch, you're not going to get in,
Yeah. Also, you got to see that it's a very big reversal of
Yeah,
a
it is a big
trend that
reversal.
was. So in that case, you want to see that even if the yellow and blue line aren't crossing yet, that they're trending to be crossing
Yeah.
extremely soon.
Yeah.
They don't necessarily, I mean, you don't want to see a wide gap in them because then
Yeah.
it's just one of those confirmations that you're going to say, okay, well, maybe that's not such a strong sell signal as I'd like.
Yeah. So
And what
let's
settings
say,
did you have the VWAP under? What
what's that?
when you put the VWAP indicator up, what setting did you put on? Like, what did you change in the settings there?
Let me see. Here we go. Inputs. It's just
It's just standard
high, low, close.
high, low, close. Okay.
Yeah, that's it. High, low, close. All righty. Now, two ways to go about this. You can do a 1150 put, and I typically like it to be very close at the money or in the money. Okay, because it costs a little more in premium. So this one, let's say, I think it would have been maybe like $26 to get in. Instead of doing like at 1145 or 1140, all right. So if you did an 1140 put, okay, this thing would be maybe like 25.20. Okay, whereas 1150 would be like 26. So I'd rather pay that extra 80 cents to even $1 in order to have that $10 gap, because this one is mostly theta and less of the intrinsic value of the stock, where the closer you are at the money, in the money, the more of the intrinsic value is tied into the premium and less theta. Okay, so I would rather, if you're going to go like single call, naked call, I would do something like that. But if you wanted to do a debit put spread, okay, you can do 1150 to either 1145. Okay, So this is a 5-point difference. So at this juncture, I would pay no more than $250 per contract. Okay, and it'll be about $250, $275 because it's so close into the money. But unless it hits at $250, I'd rather not pay it because you want to get at least 1-to-1, or do an 1150 put to 1140 put, and this one will cost you maybe about like $480 per contract. Does that make sense?
Yeah. And what date would you be using for that? Would it be the closest date, or you'd be using something a little further-
Friday. If it's day trading,
weekly.
I'm using the weekly
that week, whatever that week.
So December
Yeah.
3rd.
Okay.
I do the same thing. You got to be very careful when you do the spies and the Qs, because I mean the dates on those, like they do every Monday, Wednesday, Friday.
Yeah.
Those are very. You can make a lot of money, but you can lose a lot of money within seconds.
Yeah.
I mean
But that's one, and for that reason, David, I prefer doing stocks, because then I know that everything is it's towards Friday. And I've made a mistake where I've put it in and it's like 0 DTE, and I'm like, oops, I didn't mean to do that. I wanted to do it 3 days later, but I wasn't paying attention. I was doing it too fast. Okay.
Yeah.
So these are
that's the reason that I said to be careful, because there are times when I get in a hurry and I get excited and then I forget to change it. Because I do stocks a lot, so it's always
we've been there.
The weekly.
We've all been there, right? Right. So okay. So now this is what I do. I'm just watching it, and I can even set a timer to just look at it every 10 minutes. Because if I watch this every single second and my eyes are glued to the screen, you're going to go bonkers. I do anyway. That's my personality. So I'll do something else. Ding, I hear, because I on the alerts, I have a bunch of 10-minute alerts that pop up. And so whenever the 10-minute alerts pop up, they're all synchronized. I know that the next candle has begun. Okay, so I'm doing whatever, and then go ding. This is what I see. Okay, so I like it. It is a shorter candle, but it's down, low volume. I have to be careful. Let's watch the next one. Okay, now it's a buy signal. Okay, now at this juncture, you can do several things. If you get out, then you're cutting your losses at 3%, 5%. Okay, because not much data has gone. You're looking at like a $4 difference between here and there. So you can walk away with a smaller loss, especially if you're doing vertical puts. Your losses are much smaller. Now, if you do just a naked call and you're $4 off, how much would that be about in dollar terms, David?
400.
Yeah. So just think of it as whatever. Well, it's because you put it in at 1150 put, and you're already 156 up. So
well, you're talking about in the call price or the stock price.
So you would be about minus $400.
Yeah.
Okay.
Yeah.
Now $400.
No, you'd be down. No, honestly.
So it's about 5%.
Yeah.
Okay? So you need to also have a clear cut stop loss and take profit on a day trade like this. On a naked call or put, my stop losses are tight. Okay. Now in this situation. Because it's only at 5%, I look at that buy signal. I'll be like, okay, short. It's a very short one. It's below VWAP. It's below the blue, low volume. Okay.
Not a very good buy signal.
Yeah. So I'm just going to let it ride.
I would.
Now I'm getting nervous. Now I'm really nervous. Okay. So at this juncture, let's say I cut it because I hit my 8% stop loss. Hey, I've lost 800 bucks. That's day trading for you. It is what it is, right? So you keep watching, and there's another sell signal. So short volume might be a good entrance, but let me watch the next candle. So the next 10 minutes go by, and it's a lower low and a lower high, okay? So I'm watching this and I'm like, okay, this might be a good entrance. Should I jump in right here? Risky, risky, risky. Oh, here we go. So now you got another lower low and a lower high. You got higher volume. I have the 3 white soldiers in reverse.
Yep.
Okay, so this right here is where I would enter back in. So let's say I got in at 11:49. Okay, so at this juncture, let's stick to this. So at this juncture, I am minus 800 bucks. And this one, it's 11:49, right? So let me go at 11:45 put. It's slightly further away, so I'm paying, you know, $24.50. Okay. So I entered somewhere in the middle. Obviously, you wish you'd enter here, but you know, let's say I entered there. That's good. I'm in profit. 10 minutes later, you look, ah, crap, there's a buy signal. Now it's going back up. Okay. And here's another reason why you want to be able to look at it every 10 minutes, because at the end of 10 minutes, this is what you see.
Yeah.
If you're watching,
if you look at it
screen,
before, you might see that candle being a very large.
Yeah,
Yeah.
you would see this thing go all the way up to 11:54.
Yeah.
Now you're back down to minus 600 bucks, right? So you always want to watch at the end of the candle. That's why I will do something else until I hear the ping. Then I can evaluate based on the next candle. Okay, so now there are several things that I'm doing here. Okay, I'm evaluating this and I'm looking at, look, it's way below VWAP. It's definitely way below the blue line, the yellow line. That's a long candle. Look at this. Look at how far it has gone down to, right there. It has touched as low as 11:42. Okay, so maybe it'll touch again. If it touches multiple times, maybe that's a support. So we'll see. Okay, so I'm holding on, and look at that. There's another sell signal. Now, should you get in here or should you not? Well, if $2,400 is like, you know, a good chunk of your portfolio and represents, you know, 5-10%, then no. Okay, actually, it should never represent 5-10%. It should be, you know, less than 1 or 2%. Okay.
Yeah.
So here we go. Look at how far the candle came. 11:35. Okay. So at this juncture, this is what I would do. I like the fact that I've already locked in several things. So 11, let's say it was at 11:41. So I'm probably positive like 400 or so. Yeah, let's not touch it for now. It's too narrow. Okay, so I'm just watching it. Now it's at 11:39. So when it's at 11:39, this is what I'm looking at. I'm looking at the price of my put. And let's say the put has gone up to like 29.50. Okay. So if the price of the, here's the price of the put. Oops. At that juncture. So what I will do is, if I want to play it safe, okay, and I don't do that all the time, but if I want to play it safe, this is one of the things that I can do, is I can put in a stop limit order of 25.50. Number one, if it comes back up real quick and it hits it, not only have I at least ended in profit, but also number two, it's at least $4 away from the present price. Does that make sense?
Mm-hmm.
Okay, so let's say I want to play it safe because I'm really nervous, especially like today's movement of the market.
Yeah.
Because it could have gone either way. It could have jumped right back up. We don't know. So we don't know what happened the next 10 minutes. We already forgot. And this happened today, right? So bing. So it's a shorter inside candle. Okay. Now I'm watching it very carefully. Okay. Now there's a buy signal on a doji candle. Not good. Oh, thank goodness. Look at this. So now this has gone all the way down here. And the ending price was at 1136. Okay. So a couple of things are happening here. 1136, that's 9. That would be, wow. See, this is why I wish I was on my computer all day today. The price would be around like 41 bucks. So then I want to play it safe. And then this is what I would do now. Okay. It's my 2450 plus, remember I lost my 800 bucks before. So I'm going to add that. And my new stop loss closing limit order is 3250. So worst case scenario, if it comes back real quick and hits that, I've broken even for the day. And I also like the fact that it's almost $10 away, $8.50 away from the present price of Tesla. Okay. Now the next candle, there's another sell signal, shorter, but it's slightly lower, 35 from 36. So now watch this. Here's your VWAP. Look at how far away it is. Here's your blue line. Here's your yellow line. So they're all just continuously going down. Okay. So you're just holding until you see the next buy signal. And this is what happens. You know what? I hope I can hit 1118 for today. Now I'm doing this. Now I'm moving my price up to 40.50 because this thing is like $51 at 11.25. Okay, so from 11.25, so from 11.45 to 11.25, that's a $20 difference. Okay, that is about a $2,500 profit. Okay, now these days don't come often. It came today, of all days, it came today. I love my wife. All righty, so look at this. Just a lot of weakness. Look at that. And you know it because Omicron came about. And you see all the, so when you're looking at SPY, you're looking at all the other stuff. This is what's happening. It's just crashing.
Yep.
Okay.
Pretty much everything, except for Ford.
Look at this. So the beauty of being able to put a limit order is you're playing it safe and you're conserving your capital no matter what. In case these type of candles happen to go the opposite way, which happens, okay? But at the same time, you're leaving it uncapped so that your profit potential is unlimited for that day, okay? And I typically close it the day, that same day. So I'm watching this and look at this. Isn't that crazy? So even in the last candle of the day ended here. And I tell you what, as much as this looks good and Tesla looks like it's going to continue going down tomorrow, because this is a day trade, I close here. If I'm anywhere here and it's like 358 and it's this candle, I'm like, oh man, I wish the day was an hour longer, but you know what? Let's close it. And I will close it out. So
Yep.
if it was closed at 1098, let's say we close at 1100. Okay, you know what? I'm really hating showing you this illustration now that I think of it,
Yeah.
right? So that's a, help me, oh my gosh, you serious? That's a $45 difference. That's a $45 drop from the original put. So this thing would have been,
Thousands on a naked call.
yep.
On a spread, you would have hit your max.
So on a spread, the benefit of having those spreads is that
When you hit your max,
yes,
you get
you
out
would
and
hit,
get in a new one.
there's a good one, okay? And that does bring up a good point, right? So what happens if you were on a Tesla spread and you were at 1145 put, okay? 1140 put, okay? That's what, so you're buying this
1145 and selling the 1140.
because your cost is minimal. When you don't have a lot of capital, okay, let's say you paid 250 for this, okay. When you, what happened? Oh, okay, I made it big. So when you don't have a lot of capital, okay, and let's say you only have a couple of $1,000s in your portfolio, okay, you can play a Tesla still. And the way you do
Right.
it is by doing this, okay? Now, the most you can make is $250, right, David?
Yep.
Sucks,
On a
don't it?
one-to-one, yeah. No, I mean it's $250. Why
It's
does that
250
suck?
bucks. It's great, right? So would you close it once you hit 250?
Yeah,
Okay.
absolutely.
You could close it, or
You can roll it.
you can roll it.
Yeah, you can
Because
roll it.
again, the price, well, we didn't know that it's going to go down this way. But you know,
Right.
when you heard Omicron and you're listening to this thing and you see this thing ticking down constantly, everything else is falling, you can roll it down. So again, it all depends on where you are in, the further down it is, the better. Okay. So if Tesla, for example, was at 1120, okay, you could roll it down. Well, here's the thing. If you overlap the rolls, it could mess you up. There's a way where you can, yeah.
My best, if I would do a spread like that, I'd close it and then look for a new entry point and just open a new one. And I usually don't roll spreads, but then again, if I day trade, I usually don't day trade with a spread. Like even if I didn't have the money to do Tesla, if you look and the whole market is crashing, find another one. Verizon has really cheap calls and puts, especially on a weekly. You can one out of the money. If you're looking
the problem with Verizon is that it moves like molasses.
It absolutely does. But look at what it did today, just like Tesla. If you look at Verizon, it moved. It moved quite a bit.
So here's the suggestion. Okay. David,
maybe Verizon's not even that good, but there's plenty of other ones. Find one that you can afford and stick in there.
Well, you can do it on Tesla. You can do it on Tesla this way. Okay.
Absolutely.
So December 3rd is the expiration for this, right? What you can do is you can roll it to December 10th and actually keep it the same amount like that. But now, because you're rolling it over, you may be able to collect 50-cent credit. Oops. Okay. you can actually collect about 50 cents in credit. Okay, so what that allows you to do is you remain in the play. You are pushing it over to the next week. You're collecting 50 cents, okay? And then either later that day at 3:58, you could have closed it again for more profit, or wait for next week and close it. Okay. Yeah. Anyway, those are feasible, different ways to do it. But for now, let's just say that the best thing to do, why is it not closing? The best thing to do, here we go. What's going on? Hello. Oh my goodness. I can't get out. All right.
Needs some more RAM.
No, I pressed something and there's a way to get out. I thought it was the X button, but it's not.
Oh.
Right? F11. Okay, finally. All righty. So this is the way to trade. Let me stop the